Welcome to part 11, everyone. In this part, we are going to cover trade management. Trade management is a very crucial aspect of trading, and it is one part that is overlooked by many traders. So let's jump into our first lesson. Intro to trade management. Now, in this lesson, we are going to cover what is trade management and the evolution of a trade, right? Now, what is trade management? So trade management is the process of efficiently managing a position after you have executed the trade. As I mentioned, a lot of people that start trading, they think trading is just a one and two game. What they forget about is they forget about actually managing the trade. The idea of trade management is once you are in a position, either you're long, you're short, you're in a call, you're in a put, whatever the case may be, whatever position you are in, the idea of trade management is to manage that trade and to put yourself in a situation that allows the highest chance of success, right? So now this is how most traders interpret trading. They think the whole idea of trading is to buy and then sell. Basically enter a position and basically exit a position. That's how most traders look at a trade. But what they forget is they forget the most important part in between this concept. And the most important part in between this concept is the concept of everything in between here. And that is where the magic happens. That's managing the trade. Once again, this is how most traders look at a trade, and this is how a trade should be looked at. This is basically the magic, right? Because it's very easy for us to look at a trade and say, we're going to do this, or if the stock does that, we'll buy, we'll sell, and make up all these scenarios. But it's very hard to actually manage those expectations. It's very hard to actually manage that trade once you have real money invested. So the main thing that we have to understand is this concept of managing the trade. What goes into managing the trade and why is this so important? If you cannot manage a trade properly and you don't understand where your mess ups happen as a trader, you're never going to be able to get to the other side with a good and high profitable track record. You're probably going to take a lot of trades where you're getting out too early, entering too late, missing out profits, taking larger losses, not adjusting your trade. So many different things happen if you are unable to properly manage a trade. So let me show you guys an example, right? So if you look at this stock right here, let's say when we took the trade, this was our planned entry and this was our planned exit. So let's just make up random numbers. Let's say this is $100 and let's say this is $90. So when we took this trade, our goal or our trade setup was, hey, I'm gonna short this stock, right? I'm gonna short this stock at 100. My profit take is going to be at 90. Remember, shorting is the idea of making money when a stock goes down, right? My profit take is 90. Now, obviously, this looks all great. It looks phenomenal during this point of the trade. But what a lot of people tend to overlook, what a lot of people tend to forget is how you, primarily you, everyone is different as a trader, how you are going to react in this trade. How are you going to react when the trade starts flattening out? How are you going to react when the trade starts slowly showcasing a reversal, be it a strong reversal or a weak reversal? How are you going to react when you see a little bit green, right? That's something a lot of traders tend to overlook. Now, in this situation, the stock did not hit 90. The stock hit, let's say, $92. So let's say that's $92. So the stock hit 92. Now, where a lot of people mess up in this situation is they would get in at 100, the stock would go to 92 and start flattening out, and they would not exit. They're still stuck in that same position. They're not properly managing the trade. Their whole idea and focus point on this trade is to short at 100 and exit at 90. It's kind of like an automated machine in their head that says short at 100 and get out at 90. But when it goes to 92, that's where managing the trade concept kicks in, where you're supposed to say, wait, the stock is flattening out, the stock is holding, It may not get to 90. Yes, I know 90 is my profit target point. That's where I would ideally like for it to go. But obviously, in trading, nothing works out perfect. Now, what if it does not go to 90? What if it flats out at 92? What do I do? What is my technique? What is my strategy? What is my approach as a trader? What do I do in this situation? Do some people in situations like this panic, where they exit? Some people tend to hold. Some people just freeze and they have no idea what they want to do. You as a trader want to and should understand and have a plan on how you're going to manage this full trade, and that's the part everyone forgets about. Now in this situation, like I said, a few scenarios could have happened. Scenario A, the person that got in at 100, and once the stock went to 92, he or she didn't exit, and now the stock is at 95, let's say, right? Because he or she didn't exit. Yes, they're still up on the position, but they did not exit, which is now hurting them. Someone else might have maybe taken half off the table, right? Taken another half off there. Someone else, all different traders, different scenarios, someone else might have sold all their position at 92 and didn't wait for 90. They probably said, you know what, I'm already up 8 points in the trade. You know, am I gonna risk these 8 points for 2 points or $2? Does that make sense? No, I'm not really comfortable in the trade anymore as I was before. I will exit. Right? There's a lot of different scenarios that happen here. Now, your job as a trader is to understand how you react, how you manage a trade, which I'm going to walk you through in the upcoming videos. So, and the only way to do that is kind of track your trade, and a lot of traders tend to overlook that. So once again, this part, the middle, is the most important part, which goes to our evolution of a trade. The evolution of a trade goes to 3 concepts: before the trade, during the trade, and after the trade. Now, a lot of traders that start trading, they're always like looking at this and looking at that. Like I mentioned, they forget about this part. This is the most important part. Identifying what you do while you're in the trade, how you react to moves up, how you react to moves down. Do you exit too early? Do you exit too late? What do you do when the new news comes out? What do you do when the market shifts? Like, what do you do during these times? How do you respond? How do you manage a position? And that's where managing the trade is where a lot of traders mess up. I know so many traders that are phenomenal on finding great plays, getting good entry points, creating a great trade setup. Everything up until here is good, but the moment they execute the trade and put in real money, they become a completely different person. And obviously, that's where emotions kick in and all that stuff as well. But they become a complete different person and they're not aware. So the whole idea of trade management is to manage your positions while you're in the trade. It's to go through all of these processes and understand the management aspect of where you're messing up, where could you improve, what needs work, what are you doing a great job at, right? That's the whole idea of trade management. In the next few videos, I'm going to break down different concepts and then show you guys examples so you can understand on a deeper level.